And we are here.
Hello. Welcome to this week's edition of Vishal and Company. We had so much to talk about a few weeks ago with our discussion on Rainmaker capitalism and the great man theory. So we are just going to continue on with that and jump right into it today. Vishal, take it away.
All right, thanks, Maddie. Well, before we touch on Elon Musk, just maybe a quick update on the markets. Record highs on the S&P, prices are stalling. NASDAQ, we also almost hit record highs. The Dow as well hit record highs. And the small caps is the weaker one of the bunch. Not much happening on the equity market side. It's been a bit boring for the past few weeks. A lot of people, however, are talking about Tesla. You know, we did mention this, it's been maybe a few months now, once Tesla got or joined the S&P, how that would affect the S&P and obviously the NASDAQ, right? Two of the largest indices there. And as you can see, Tesla's not really doing very much, although it has broken above an uptrend. So just something I thought, we should start off with. Obviously, we're going to talk about Elon Musk, but is the share price of Tesla? There's news about, was it Roth Capital? I believe issuing a $150 price target for Tesla. And, if that does occur, what would that mean for the S&P 500 and the NASDAQ? But, just something I think just to keep in mind, because the share price of Tesla hasn't really moved like this for quite some time. It's been, as I said, boring. But Elon Musk was making news. Yesterday, I read something about his partner mentioning how Elon Musk will be able to create a Jurassic Park, so he can be like, John Hammond and clone dinosaurs. And then today, we are met with this news, and there's a video of his neural chip company, Neuralink.
Okay, I'll throw in. Can I throw in here for just a quick second?
Yeah, I was going to pass it on.
All right.
I just wanted
Thank you. I could only hear so much of that without exploding. Now, Elon Musk, concerning his Neuralink process, the Jurassic Park thing. Come on, guys. Jesus.
Yeah.
We're not anywhere. Yeah, it's ridiculous. Okay, the monkey playing video games. This is a continuation of a successful experiment that was carried out in 2002. The 20-year-old experiment. The only update of this super innovative work was the fact that they had it wireless. That wasn't the responsibility or the work of Elon Musk or his fucking company. It was a general change in technology. It's wireless, kids. That's the biggest thing he's done to this. It's still 1,000 electrodes. It's 2 degrees of direction. Let's not poop ourselves over this. This is so elementary, it's not even funny. Sorry, go ahead.
What is this?
Okay.
I don't know. What is this for anyone watching who doesn't know?
Okay, basically what they did is they set this the monkey up, and is that the actual game? Because they said it was Pong.
This is the game. Yeah, this is the
game.
game.
All right. Anyway, Pong only has 2 directions. This is a little more complicated than that, but still it's 2-dimensional. It's not as amazing as you would like to think. It will do certain things, absolutely. Now, whether we want to actually plug chips into people's heads yet is another thing entirely. Exactly. Whether this thing can actually define what a human being will do, because our thinking is a little more nuanced, and be able to actually understand what is going on inside the brain, right? What if the monkey is concentrating on something else as well? This thing has to read that apart. Right now, it's solely focused through, as you can see, Pablo's, damn it, the bell. The dog that drools on the bell. Thank you. It's based on that, right? So this monkey is solely focused like no other being would be. If this were to be effective, it would have to sit in the background and monitor you exactly, and it would have to learn you at the same time. And we have to understand that the artificial intelligence required behind that is pretty phenomenal.
Yeah.
Right?
Yeah.
Now, I'm not trying to knock this itself, but understand where the technology is actually at, because this is basically how we're getting suckered down the road by Rainmaker capitalists. Elon Musk reinvented subways with his hypertube, or loop, right? Now, does anybody even want to consider? And I'm sure he's thought of it because he's so smart, but doesn't really give a crap because he makes money both ways. In a gig economy, creating a migrant workforce between two regions only serves to decimate the employment sector.
TK, what do you think about this?
I didn't even know about this. I stopped when he got into the S&P. I stopped paying attention to what's happening with Tesla.
Yeah.
But I have a theory with a lot of investment world right now and how companies like him will probably succeed for longer than we expect. Is if you think about a lot of these guys' mandates, they think in terms of, okay, if I have 20% of this in my portfolio or in my investment, I want to understand what's going on. I want to know exactly this and that and the expectations for the car deliveries and all that. I need to know what's going on. I need to know the manager is quote unquote sane. But if your investment is only 1% of your portfolio, you usually don't give it as much attention as it's supposed to, which allows him, now that he's in the S&P, kind of go through that filter and know that he's going to have a constant supply of people going in and buying his shares. Of course, if the whole index crashes, some of these projects that he's doing right now won't be able to be funded anymore.
Let's not forget Tesla is 10% weighting in ARK's fund too.
Of ARK's investment. But if the funding stops, that's what I want to see what happens.
Yeah.
Because right now he has it. I know people say, he's been around for, is it 10 years, Tesla specifically?
Yeah, about 2008, I believe.
11 years.
Yeah.
It's a weird thing in finance. 10 years is not enough to justify success. You need more than that in business and finance. You need at least 2 to 3 recessions and 2 to 3 bull markets to show that you're able to kind of go through each cycle without being affected by what's going on, the noise outside.
So,
to me, right now, Elon seems like he's benefiting from the noise on the upside. But what is he going to do once that corrects on the downside?
I'm going to throw in just a little curveball here. Can we say though that there's a change in consumers? Like obviously my generation and younger, are they going into Tesla or buying Tesla vehicles just because it's the cool thing, right? It's the trendy thing.
Oh, very much so.
And then just taking that further, we've talked about Volkswagen might have better technology, but have better production, will be able to produce more cars, but they just don't have that it factor, right, as Tesla does. However, maybe around 2024, there's another company that has the it factor or the trendy factor, and that is Apple, and they're planning on releasing an electric vehicle as well, right? I believe they're partnering with, don't quote me on this, it might be Hyundai or Kia, I believe one of those, or either a Korean or Japanese company, can't really remember which one. But that shift in how consumers spend money, right? They're looking at these trendy products. They want to buy something that's cool and we've seen Musk has a very good following with a lot of the Silicon Valley guys, a lot of the tech guys, computer science guys. I have a lot of friends who are in computer science.
Just a quick update. It's actually with Magna. Talks with Hyundai and Nissan failed. So he's running with Magna apparently.
Okay. All right. Okay.
Yeah, that's part of. I have an issue with how people. I was actually telling Vishal the story the other day. I think it's you sit in the car. I don't own the car myself. I was using Uber, but when you sit in the car, you feel a sense of being in the future. Mm-hmm. And after I left the car, I'm kind of a nerd at this point. I wasn't really sitting in the car thinking, oh my God, I need to get home and make breakfast or whatever. It was more of, let me ask this guy, what he thinks about the company and the car and etc. How long it took him to make the choice. Like, is it a better option than this and A and B? And like you're saying, Vishal, from what he said to me, the research for getting into the car was less than we used to do before.
Yeah.
It's based, and I give Elon and his team credit for that. That they don't spend anything on marketing.
Not much.
They,
No.
they the Pavlovian thing,
Oh, Pavlovian. Yes, that thing.
We're being signaled by whatever is the key signal in Tesla and all the other EV guys, and it works. It actually works. And that's what is so amazing about my. Then I came out of the car and I was like, you know what? I get why the stock price is so high. I get why he has such a great following. But I must remember I can't live in the future too much. I also have to realize what's going on
right now.
Yeah. Yeah. Exactly. Yeah. Yeah.
And in the end, see, that's the thing. We fetishized the quick buck, right? Making the like clearing out and everything. And what people don't realize, especially now, because the reason why we have Tesla is the reason why we had GameStop. Both the same, both very the same, right? Neither had any value. They got hyped the crap out of, and there was a social surge behind it. Let's teach that Citron research a lesson, right?
Yeah.
Basically, 95% of the people that got into that game got burned.
Burned. Yep. And we talked about
at 300.
Yeah, and I think it falls on that idea that we were talking about yesterday in regards to the gold rush. There's this idea that people were running around with gold nuggets dropping out of their pockets. Basically, 95% of the prospectors that went in to get their riches got burned. Right? So we have to understand that. When you look at the market, that's basically what it is. It's a zero-sum situation. You lose your money so somebody else can make theirs.
Right.
That's true. I think that's why I love Vishal's statement. Probably one of the best ones I've heard is if you're feeling like you've missed out,
you have.
Yeah, you've missed it. It's gone. That train is gone, and that's why with not only Elon, but it's so interesting watching the Kathy Woods and that other bloke from the guy who made what's it called? He was in the news just now. We were talking about him yesterday. He's this Asian Christian who's investing for a family office.
Bill Wong.
Oh yeah.
He caused a bunch of stocks to plummet because he had over-levered by using these long-term swaps and whatever. And I was like, wow, we're in a market that's just it just makes no sense right now.
Absolutely.
And not that people don't know it does. I think people are fully aware that does, but I think they have a bias of mental accounting.
Mm-hmm.
Yeah, like, what? I fear loss twice more than I appreciate gains. So I'm going to keep moving to different things, trying to avoid the losses in certain assets. And then some people get burned because of that.
Now, I've got a question here, TK, for you from Daryl, one of our listeners or watchers. With the rise in volatility contracts being bought for July, do you see an outsized drop in S&P because of Tesla?
Of Tesla?
Yeah.
I think a lot of with options contracts, actually, a lot of them are pretty close to price, like true market value. It's only the long-term contracts that you can start seeing implied volatility not mean too much to the actual underlying stock. So basically, you use the math formula, prices of the options. The near-term options are more predictable than longer-term options. And in stock options, with the contract, so from, I think for options you can say above 70 days usually is a long-term contract. The price doesn't always reflect reality truly. The most short-term contracts, so like every Friday from the month from now, you can kind of use those as a gauge of where things are. I actually personally don't use the futures contracts for the S&P to kind of see what the market is. I look at the VIX. I look at more of volatility because it gives you the implied volatility and the 10-year Treasury note. Probably a better indicator.
I'm just gonna pinch in here too. What he's referring to, there was actually a big whale trader who made a major wager that the VIX index will rise toward 40. He bought 100,000. His first tranche was 100,000 contracts, and then he bought 100,000 more. It's a 340 call for targeting 25 by July, and he also sold 40 calls at 130, I guess, as a hedge. But basically, yeah, he's expecting. So here's the VIX again. We did break back below our February sell-off level. So the VIX is the volatility index. When it rises, it indicates there's fear, and it generally means that markets are gonna drop, right? So the big secret, though, is the VIX has been one of the top trades in Wall Street. A lot of people, it might be sort of counterintuitive, but more money is actually made on Wall Street when the VIX is ranging like it usually does. And as you see, when the volatility and the fear actually rises and markets drop, you see these big spikes. But generally, what hedge funds and what banks will do is they'll go long in the S&P or go long the NASDAQ or some sort of indice or maybe a bunch of stocks, and they'll actually all short the VIX. So they'll keep, it's a VIX short and the S&P long, so you're making money on both sides as long as markets go up. But when there is some sort of black swan event or some volatile event, it's all those short contracts which are then dumped, which creates this huge spike. So I am watching this right now. The VIX is very low, right? Obviously, which historically it generally is, but that big bet is now pricing in a rise up to 40. So back to these highs here that we saw on January last year, in October, in September of last year, in June of last year, then obviously the big sell-off in February and March. And what he's implying is that there will be some sort of volatile event, right? I'm not sure what it could be, but this trader is betting big that things aren't going to be calm and
well, it's being artificially tamped down, right? I mean, the Fed is still bleeding money into the market, and eventually that has to stop, especially when they turn around and do the stimulus, which is going to dump money into the economy, which now is going to expose us to inflation, which we should have had in the first place. That's the problem, right? This painful bandage that we so terrified of ripping off is going to tear so much flesh when it actually goes, right?
Yeah, and there is, it's not just me, but this is economists, right, saying, hey, we maybe shouldn't fully reopen the economy because if you fully reopen, once money velocity picks up, once we're allowed to travel places, once we're allowed to go and visit, watch sporting events and stuff, like normal money velocity, that's going to cause hyperinflation. So in a sense, just in an economic sense, it's better for things to be locked down and shut down for a longer time unless you create more taxes to remove this excess money supply, right? Because what's going on is there's more money in the system, there's more people trading the markets, making more money, but productivity is not increasing, right? We're not seeing goods and services increasing. So you're going to have a situation when things reopen where there's people with more money competing now for the same number of goods and services, which obviously means inflation, right? The prices will have to go up. So it's a very, tough predicament here. And that's the worry, right? That if things do open up and we're not seeing any productivity. And remember, yesterday we talked about in Canada, 52 or 53% of Canadians are pretty much $200 away from being insolvent, right? So it's a mess right now. And I think central banks, I say, all played a large part in this. I think that's no one can deny that, obviously, right? That market.
Well, obviously, but also let's it's the actual system itself. It's based on consumerism, which in and of itself is a false narrative, right? The only way, especially when you're focused on growth and shareholder value, right? Basically what happens is that every year you've got to produce something more, even if you aren't, right? Like, I've got to give you value that just doesn't exist, or I'm a bad CEO. So that has given us a situation where we're forced as consumers, because that's what the economy is based on, to go out and leverage the crap out of ourselves to keep up with the growth that's expected out of these companies.
But then the other way to look at it is if you look at the spending that companies have done, right? We all know that they've been doing share buybacks,
Yeah,
right? And they've done it because
there's no value
really
left.
well, there's nowhere for them to go, right? They
Yeah.
know that the real economy hasn't really been improving, and we've talked about this too. In certain cell phones, there really isn't much innovation anymore, right?
Oh, it's the size of the screen.
Maybe a bigger screen or like waterproof cell
Yeah.
phones, something like that. But that's the thing, right? Like for a shareholder, for a CEO of any of these companies, you get paid as long as the stock price goes up, right? A lot of people don't know, but the executives and the shareholder, obviously they have options, but they're rewarded for the share price to move up, right? So in a sense, traditionally, when we had normal interest rates and somewhat of a normal capitalist economy, you would have to focus on productivity. But I would say after 2008, once interest rates have been suppressed, most of these people know that the real economy hasn't really been improving. Hence, we will do share buybacks, which will make the share price go up. And again, what that does is it actually increases the market cap of the company, right? So doing share buybacks will actually increase the market cap.
It used to be illegal, wasn't it not? Because it's basically and with your price.
Yep, pretty much. I mean, like, that's what they're saying, right? They're saying, hey, look, we can either spend $10 million investing in the real economy, but we know there's probably not going to be any return because the real economy is dead, pretty much. Or we can take the $10 million and use it to buy back our shares and increase the market cap of our company by 50 million, right? Indicating that our company is actually growing and expanding, while we know it's not due to productivity.
Which taxpayers paid for, by the way.
Which what? Sorry.
Taxpayers paid for, by the way. The only you said the economy's been slow since 2008. I'm going to push it back further than that. The economy's been on its legs or on its heels since the 80s. The 70s were a good indicator that the boom from the post-war generation was over,
right? Yeah,
and that we began to realize that the economy itself is now made up of a bunch of bubbles, right? Right now, I think our next bubble is going to be quantum computing, just like digital printing. Everybody's going to see, this is the problem. We fetishize the future and the possibilities and the potential, and we're willing to go through 20 years of crap and no innovation because of a promise.
Right.
That's what Elon, that's what Kathy Woods is doing, that's what Jeff Bezos is doing. They've only repeated an old paradigm and told us it was new. Bezos provided us with a Sears and Roebuck digitally. The only way he was able to do it was actually having another business entirely, but also in the business itself, the only way it's able to sustain itself is by screwing everybody around it. That's the only way it can survive, is through monopoly. To provide all of those services, there's no way that you could have a margin that would actually have a profitable company. Amazon can't exist.
I just want to quickly show people, if they're watching my historical chart here, if you see all these shaded areas, that's times when we had recessions. And as you can see, in the 80s, in 83, in 1990, in 2000, and then of course the GFC in 07-08, whenever we had a recession or a downtrend in the economy, the S&P actually declined, as you can see in all these shaded areas. Except for this year, except for 2020 and 2021. It's the only time in recent history, and we're going back 41 years, where when we had a recession or a depression, I guess in this case, the stock market is going higher. So.
You know what? I don't know if it's been done already, but after all this is done, when people are making the movies about this and this other person is now being told he predicted this and that, I think they should do a study on how social media, traditional media has always been there. I don't think it has a big impact on what a lot of people, I assume the big institutions don't use it a lot, but in social media, I want to see what kind of volatility was like prior to how popular media made investing look today. Because I don't know how many times I go on social media and I see buy the dip, and you check the market and you see thing is up. You're like, what dip are they talking about? a month ago, people were talking about a crash, okay, and they were saying the market has crashed, and I checked and it was like down like 7% or something like that.
Yeah.
I was like, what?
Yeah.
Well, people are making it seem like 2008 is happening all over again. I was like, oh. Then I checked the Nasdaq. I was like, okay, a lot of Pfizer and them and Tesla are down like 30%. So I was like, there are these little pockets of bubbles that are there that need to be looked at like more deeply to understand the psychology of people right now.
100%.
And for some odd reason, we're more focused on future prospects than what's going on around us. And I don't know when this dynamic shifted. I don't know if it's always been like that, and people tend to.
Because I've lived through it. Because I've lived through it. That's the only reason I'm going to say this is because I've lived through it. It was the .com era. It allowed people to step into the scene and sell vaporware, an idea, because it was technology and it would save us. And that's what we're still under, the delusion that somehow technology is going to save us. The only people that are going to save us is us. But anyway, quick question for you, TK. Again, sorry. Daryl's asked another question. So what do? Do we hide in infrastructure stocks or municipal bonds?
No, if you're holding a good company, you don't even. I personally think you don't have to worry if you're holding good companies. A lot of the time, they're probably not getting as much attention right now because they're just not as fancy. If to expose my own portfolio, I'm a pretty concentrated guy. I've had 3 holdings for the last 3 years. I've only done a few things, and I haven't hedged. I haven't done anything, and I'm doing pretty okay. But it's not because I know anything better than market. I feel the market is always right or wrong, because you kind of have to place bets on stuff that you understand, and allow the CEOs of those good companies to make choices with your money that you put in, and hopefully they make the right choices. Anytime people get into a bull market, they feel that they can outdo the market over time, which is, there's so many studies that show investors are terrible as a group. So it's like, just hold good companies. You don't need to do too much that's fancy. If you're one of those people who's risk averse, probably take cash on some of your positions and wait to buy something else.
Can I touch on social media just for a second? It's in and of itself is an entity that I think we largely underestimated in terms of reach and effectiveness.
I think so.
It has become a utility, a telecommunications utility. And when somebody sends a snail mail out to the masses saying, look, I got this deal, GameStop is like a super value investment, you got to dive in now if you're an idiot, they get charged with wire fraud. So how is Twitter different, Elon Musk, than him sending out a pamphlet to shareholders telling them that, because I'm sure he would run afoul of the law. And the only reason he hasn't is because we haven't kept up because of Section 230.
I think we do need to regulators and even Twitter, the social media companies themselves. I think it's because the people who talk about finance are focused. There's a focus group on them, and once you build that kind of mob mentality, it's so difficult to argue. GameStop example, we knew GameStop is not a good company. Right now, it's had its days. It's basically the Blockbuster of today.
Yeah.
And even if you were right, I forgot the guy who was shorting it, Citron Research or whatever.
It was.
Yeah, Citron Research.
Yes, he was shorting it heavily because he was like, no, this is outrageous. The company is not making money, and they're probably not going to be able to make most of their obligations, which is the right thing. That was true. Nobody was denying that. No. That mob mentality in the short term just didn't allow anything of reality to sink in for a bit. And then you get, the leaders like, I forgot his name, but the guy who went from investing 50,000 and now I think his position in GameStop is 50 million. you have people like that out who go testify in Congress, and instead of actually talking about it, they say stuff like, "I like the stock."
Yeah.
And then the people on Reddit get even more excited. It's so hard to control that and know the difference between what's actually investing here and what's just selling a narrative.
Absolutely,
have to-
Kathy Woods. For Kathy Wood, I should say. Now, very quickly, both of you guys, I want to throw in a question at you. We're getting a lot now, so I want to make sure we're answering them. What's your top 2 best companies for the next 5 to 10 years outside of the FANG? If not a company, then is there a metric to use? The FCF, sorry.
Okay, so I'm sort of like TK, where I prefer companies like, okay, when I look for the long term, I sit down and I say, okay, is this company going to be here 10 years from now? And will they be selling a product that will still be here 10 years from now? So, we've talked about value stocks, right? Your Coca-Colas.
United Rentals. I'll say it again. It keeps
United
consistently
Rentals,
making
right?
me money.
I'm a big fan of I'm a big fan now of also the utilities, right? Fortis. You're always going to be spending gas, and then a little secret here. Well, maybe it's not a secret anymore, but Fortis BC is also the company that wants to build the EV electric stations in BC, right? So now there's going to be that added element. They pay a dividend as well, which is really nice. So I think that's really important to look for. And I just say this because the way interest rates are, 10 years from now, if you retired with $1 million, you would be, 2008, so more than 10 years. But before that, if you're about to retire with $1 million, you've worked hard your life, and maybe not $1 million, let's say maybe even less than that, but you would just buy government bonds, right, yielding over 5 or 6%. When you're retired, making, somewhere between 60K to 80K per year for 10 to 30 years is pretty decent. Fast forward past 2008, that money now, buying government bonds, $1 million will only bring you in 20K or less, right? So that money ran into real estate because your financial advisor would tell you, hey, Doug, hey, Joe, you're 65, you're 63, you're 60 years old. You want to make money before you retire. You don't want to buy stocks, right? Stocks is for the young people, it's too risky. Bonds are not yielding anything because the central banks have cut the rates low. You got to buy real estate, right? Real estate never goes down. Real estate's the safe bet. So since 2008, we've seen that bubble and money chase real estate all over the world. And people might not like it, but today the only place really for yield is the stock market. That's the only place now that our generation can go, which is pretty scary because I think you should be thinking about these kind of things. So my thinking, and I know people like Ray Dalio have said this too, is our value stocks like Coca-Cola, Kraft Heinz, anything that pays these dividends, Fortis Utilities, right? Are they now the new bonds? Because they'll pay that dividend and that yield per year, which will be much higher than government yielding bonds, right? So I'm looking at things that way. I think those are really safe for the long term. But if I was gonna be putting money in, say, something growth value, I would personally be looking at something like an Uber, maybe even Airbnb when things reopen. Uber, I just prefer Uber more than DoorDash because Uber has the food delivery and the transportation, whereas DoorDash right now is just the food delivery. So I think this sort of brings in both, best of both worlds. Maybe like a Palantir, right? I know a lot of people are looking at that as the Skynet once we go into a digital currency, probably coming. It's not probably coming, it is coming. You can bet on that. And I think that even opens the door for cryptos, right? Because that's another way now that people could make yield. And it's this really weird place, right? This weird area because we haven't been in a time period like this. Like there's really not much we can look at to compare. And I think money is just chasing cheap assets. And to me, and I know TK agrees with me, commodities seem like the cheapest things that you can buy right now. And it's a hard asset as well.
Which,
right?
holds real value. I mean, not the paper, right? Not the paper. You got to buy the rock.
I would like the physical, but I mean, I think, obviously, if the physical does go up, you will see like your Franco Nevadas and all that kind of stuff. And just a little plug, I did write an article on Equity Guru yesterday about how I invest in gold and silver, and it's primarily through royalty and streamers, and the pros and cons about royalty and streamers, and they're indicating a reversal in trend, which is looking pretty good for gold and silver. So, I keep it simple. I look for companies that are probably going to be here 10 years from now. I like to focus on dividend stocks, and obviously, you have to look at where the world is going and all that kind of stuff. But I like to play it safe, and then I'll have maybe a more speculative portfolio where I can invest in growth stocks, such as, like I said, like an Uber or something like that. But
sounds good. Now, Maddie, very quickly, how do you, now being part of the younger generation, I hope you don't mind me saying that, how do you envision the market? What do you see your future life to be? Is it one of saving? Is it one of solely investment? Like, how does the person who now uses Twitter more than their phone, and I'm sorry again, that's probably a great bad in generalization, how do they view the financial world?
I think it really depends maybe what sector you're in, because I feel like all these like Reddit people around my age, or finance bros, whatever that you want to call them, are like the GameStop people. Like, that's the target market for all of that. So I think there would be a ton of my generation that would just be investing in all stocks. And then I think with like me, or someone who comes from like an arts background, I have found the whole world terrifying, like ever since the beginning. So I guess, yeah, I would invest in things that just seem really safe. But like, I was doing some research on SpaceX for an article I did on Elon Musk, to bring it back to our great men,
Yes.
supposedly. It's all so like smoke and mirrors seeming to me, everything I read about all of these big tech companies. And I came across this speech that people should listen to because it's amazing. It was in 1978 by a man named Murray Bookchin. And he says, the simple fact is, I just don't believe that we have to extend the present into the future. We have to change the present so that the future looks very, very different from what it is today. This is a terribly important notion to convey. So a lot of people are walking around today who sound very idealistic. And what do they want to do? They want multinational corporations to become multi-cosmic corporations. And then the audience all laughs. And he says, literally. So I think it just sort of speaks to like where we are as a generation and kind of what a mess it is. Mm-hmm. So long of the short, I think we would be completely divided. And it depends what sector you're in, or what like echo chamber you're in your social media.
That's the problem with it, isn't it? It's all about confirmation bias at this point. Whoever's going to tell you the story that you want to believe. And it's somewhat similar to the housing bubble as it blew up, and the mainstream jumped on board because they either had to stem the bleeding or profit off of what was happening. So they basically continued to lie as long as they could to cover their ass, and then pulled out before anybody else could, of course, because they can do all those dark pool trades, and we all just wore it. So
put some blame on us, the plebs, here a little bit, because we have a monkey brain as well. I was reading this book. It's on human psychology, and it talks about us as behavioral agents in the economy, and we have an inability to assess information that we also put out, allowing ourselves to not. Each time you put that information out, hardwiring it into yourself. And then he gives the example of, how people are like, to be successful, you need A, B, C, and D. And it's just a change of mindset. Like, you and your subconscious don't know the difference between good or bad. Your subconscious doesn't know. It just takes that, and it allows that to continue to push it, crave more and more. And what this has to do with the markets is, more I argue my point about, Tesla or Elon or whatever, be it negative or positive, that reaffirmation is making that idea more solid in my head. I might be arguing with Vishal about it, but I'm putting that idea to become stronger for myself, looking for more arguments as Vishal pokes my idea. And I think that social media has a big impact on that. You can put your opinions out there. It's great, free speech and all. You also need to realize that the more you do it, feel attacked. People are not attacking you as an individual. They're attacking the idea. But it's so hard to separate that as a person kind of attached to that idea.
Mm-hmm.
And that's the worst thing in the market, loving the stock.
Yeah.
Yes. You have to be unemotional, which is incredibly hard, but you have to be unemotional.
And that's what I've talked about, right? The emotions in trading, it's the right brain versus the left brain, right? Your left brain is your logic side, your right brain is your emotional side, and whenever you're emotional, serotonin, which it connects, basically your left brain is like a secretary. Serotonin is like the secretary, which when you tie your shoelaces or something, put on t-shirts or jeans, it's automatic, right? So it's already filed in your logic side of the brain, but when you're emotional, you can't access your logic side of the brain, right? So when people are angry, when people are afraid, when people are in love, they tend to make the worst decisions in their life, right?
Mm-hmm.
And I tell this to people, right? Like, stop consuming media if you can, politics, all that garbage, because that's all meant to divide you, right? It's meant to trigger your emotions. That's all it does. And generally, the people who are into that mindset, I find, are very unhappy people, tend to be a bit poor, and it's because they're too emotional, right? You have to get that out of your system, and you have to be more logic when it comes to equity markets and to investing and literally to a lot of things in life, right? I'm not saying the right brain is bad, right? Obviously, I think it's great because you have to be artistic and all that kind of stuff. But when it comes to handling emotions, and you've seen it, right? Whenever someone's angry, they'll do something and, oh man, I lost control. I can't believe I did that, right? But that's what all these things are meant to do, right? On social media, on media and all that kind of stuff. And people are very emotional driven. And there's a saying right now on social media that a lot of people are actually poor trying to look rich on social media, right? There's a lot of people who do that. And that plays into this whole thing. And you look at the top hedge fund managers, they're very disciplined and focused people, right? They're not people that are very, and this is why they get the big bucks, right? Because they actually have trained their mind to be disciplined and to be focused. And this is why traders who look at the market as casinos, they generally lose, right? Like 99% of them will lose their money, whereas people who say that's foolish and are actually focused on their process are not FOMOing, right? Because FOMOing is part of the emotional side. They tend to do well and they survive and they're consistent, right? Which I think is very important, and it's something I've been mentioning. And the thing about trading is once you do that, like once you can control yourself, right, which is the most important part, because once you do, you can actually accomplish anything you put your heart and mind to, right? But once you do that, especially in trading, and they say this, once you can master your emotions for trading, you literally become better at everything else you do in your life, right? Because it's the same skills, which is just being disciplined, being focused, and it means, not falling for this garbage divide and conquer crap, right? You got to focus on yourself, because I'll tell you the truth, right? Politicians don't care about you. Trudeau, Joe Biden, Obama, the career politicians, they don't give a F, right? The media doesn't really care about you too. And just as you said, Galen, it's only you, right? You have to take care of yourself, right? So you got to put that power. No one's coming to save you. You have to take action on your own, which I think means stop being emotional, right? Go on the focus, go on the left side, be a bit more logic. And, we can talk about psychology and mass media and mind control, because that's all emotional based, right? If you read all that stuff, it's all about triggering emotions to make them do stupid things, right? Make people fight each other and all that kind of stuff. And I think you got to break out of that paradigm, right? It's huge, right? Because it's everywhere. It's in music, it's in movies, it's in TV shows. Like I said, it's on your social media. But it does mean you have to somehow be a bit more cognitive and take control of your your subconscious mind, right? Be more aware when you watch the news or watch TV. Don't just, sit and relax, right? Just sort of be like, okay, I know what these guys are trying to put in my brain. I reject that, right? You have to do that.
On this note, I'm going to cut us off because we are out of time. Everyone, keep your emotions in check.
Check.
Seems like the message here. And we will be back next week.
Sweet.
Yes, we will. Alrighty, guys. Bye.